Welcome to the Barcelona Trader. This is GoldGPT with your session analysis for Sunday, July 27th at 6 p.m. Eastern, kicking off the Asia session focused on spot gold and gold futures. I'll walk you through fundamentals, market sentiment, key levels, pivots, and setups that we're watching, so you can approach the session with confidence, clarity, and maybe even a mild dopamine hit. No promises on that last one. If you're new here, we trade live every day using a precision scalping strategy. You can learn the full system and sign up to be among the first to use me, GoldGPT, as your AI trading assistant for spot gold and gold futures. You'll also find our live stream schedule for the New York and Asia sessions at thebarcelonatrader.com. And yes, you can join our Zoom room to interact with us live and get personalized coaching from Mike and Tono. Now let's dive into the analysis. We're heading into the Asia session off Friday's close at $3,337 and change. That marks a roughly $32 drop on the day, leaving gold looking beat up and a little moody. Friday's range was $3,325 to $3,373. The GC futures contract closed similarly, just under $3,336. As always, it's Sunday, so volume is currently non-existent. We are flying with no fuel, but that will change quickly. A friendly reminder to check for any fresh geopolitical or economic headlines just before the open. News has a habit of showing up fashionably late and sometimes drunk. There are no major economic events scheduled for Sunday, but surprises love Sundays, so don't get lazy. Now let's look at the sentiment. The dollar index closed Friday at 97.673. It fell into the final hour, then bounced slightly, essentially ending flat. 10-year yields also meandered sideways to close around 4.386. Nothing exciting there, which frankly should worry you more than if they were volatile. The VIX dropped to 14.93, suggesting a market high on ambient, or just blissfully ignorant. Meanwhile, the FXBlue dashboard gives the US dollar a -0.9 strength rating, while gold is even weaker at -1.8. That puts gold dead last on the relative strength board going into the new week. Think of it as showing up to a knife fight with a spoon. Technically, let's talk structure. On the 15-minute chart, gold has been in a clean, impulsive downtrend with a series of lower highs and lower lows that stretch from Wednesday into Friday's close. Price action bottomed near 3,312 and has since retraced modestly. There is now a well-defined bearish channel pushing price down toward the lower blue structure zone that begins just above 3,310 and stretches to around 3,300. That area is not just a random box. It's been respected multiple times and aligns with prior market structure from mid-July. Expect a potential bounce from this level, or if broken, a possible slippery slide toward the lower weekly pivot zone. If buyers show up early, we'll be watching for a retest of the descending midline near 3,350, which also aligns closely with Friday's point of control and the daily pivot at 3,345. That level is going to be critical. If gold clears and holds above 3,345 with momentum, it could break up toward the next supply zone near 3,366, also near the daily R1 pivot. A clean break above 3,366 would be trend shifting and could open the door toward the daily R2 at 3,394. But that would require a spark, either news or a major dollar dump. Don't count on it yet. To the downside, watch for early weakness below 3,320. If price clears that, there is not much in the way until the prior low near 3,312, and then the key support shelf near 3,300 even. Below that, look out below. The next structural demand zone is 3,285 to 3,275, just beneath the weekly M2 pivot. For breakout scalpers, the key intraday levels are, to the upside, 3,345 and then 3,366. To the downside, 3,320, 3,312, and then the slippery floor at 3,300. In short, if we bounce at the open, don't get cocky unless we're holding above the 3,345 region with conviction. And if we drop, don't blindly long a falling knife unless we're near real structure, not just pivot math. That wraps up your session briefing. As always, manage your risk, obey your rules, and if you're feeling antsy, handwrite them again before the open. The market doesn't care about your feelings, but it does tend to respect discipline. Please remember to like this video and subscribe to the channel if you've found this analysis helpful, and hit the bell icon to be alerted whenever we publish the next one. Thanks for tuning in.